Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Hantech Markets. Each week I'll take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we're still trading off the legacy of these two huge fundamental events that we had at the back end of last week with the ECB and also the non-farm payrolls report. Massive impacts on the market, certainly on the euro from the ECB meeting, and subsequently it looks like following on from the non-farm payrolls report, we've got pretty much nailed on the likelihood of a Fed rate hike next week. So how is this playing out through the markets? Well, we're seeing we've seen a strong movement higher in the euro, and now we're beginning to see that retrace with this dollar strength returning once more. This is also helping to sort of throw these equity markets around. Equity markets continue, certainly in the eurozone, to play out through a negative correlation trade with the euro, and that is certainly true of the DAX, and that trade is resuming its course today, it would seem, with the euro weakness and the DAX strength. So exactly how that plays out we shall see this week, and I think that one plays off the other. And throughout this week, well, we're still moving in towards a load of monetary policy updates. We've got monetary policy meetings from the SNB, the RBNZ, and also the Bank of England as well. So lots going on there, potentially with some rate cuts coming through, but I'll look at that in a bit. But also we've got some Chinese data, some trade data, and some inflation data that will certainly have an impact, you'd imagine, on the risk appetite of Forex traders as well. So moving through this week, well, we've got the Forex markets. How are they looking? Well, the euro, as I said, a big jump on the back of the short squeezing on the ECB meeting last week. Huge gains that we saw, but are they now beginning to peter out? We've already seen a bit of a corrective move with that dollar strength resuming on Friday, leaving a high at 109.80, and then subsequently we're seeing a bit of a retreat going on. I think we're going to see a pivot level, big pivot level at 108.10. That was the old key floor throughout the middle part of the year, and that has already come as in line as being a resistance. It is now being acting as support. So I think that is a key level that we need to watch out for on Monday and possibly throughout this week. On to cable, well, we've seen again sharp move on cable higher as the dollar was weak on Thursday. That's now again starting to retreat once more. 151.50 is the key resistance coming into place there, and it will be interesting to see if once again the dollar bulls can reclaim their status as the in control party and drag this pair lower once again back towards that key level at $1.50 seems to be the level there. And on the dollar yen, once more, dollar bulls seemingly trying to get control once again. It's in a bit of a range play at the moment, 122.20 towards 123.67. An upside break of that would give you 100 pips of band measured higher, and that would imply a retest of the 125.28 key high that we saw in the summer. And finally, on the Kiwi, well, we've seen the Kiwi underperforming on Monday morning. Interesting, because that's I've seen that's come on the back of some investment banks which are beginning to think that there could be a bit of a rate cut going on from the RBNZ. Apparently, it's not priced in entirely yet, so that could have an impact certainly to the downside of the Kiwi, and that's what we're seeing this morning, the Kiwi being the big underperformer for the major currencies. And on indices, well, as I said, there is this negative correlation play between the Eurozone markets and the euro. Now, the DAX has been the big play in that massive run higher. 22% the DAX pull on in 2 months. Now, following on from that ECB disappointment that we saw on Thursday, the DAX fell sharply. But it has reclaimed 2% of that move today. Is this more of a counter trend move towards a correction, or is it the beginnings of further gains? Well, it certainly looked as though last week that there were some key levels that were breaking down, some technical sell signals coming through the market. So at the moment, I'm sort of bordering on the fact that this is a bit of a counter trend move within a bit of a corrective move to the downside. But as I said, if the DAX can continue higher and the euro continues to correct, then we could see some further upside in the DAX. On the S&P 500, we have seen a bit of choppiness actually in recent days, and it's interesting that the S&P 500 is back up higher again, and we're looking towards the resistance levels. 2115 towards 2135 is a key band of resistance there. Can the S&P 500 challenge that resistance once again? The question is asked, is that Santa Claus rally already priced into the market, and could the profit takers be coming back? And finally, FTSE. Well, we've seen FTSE being struggling through the last few months, continues to underperform the DAX and the S&P 500, and it's been struggling to find a break through the key resistance level around about 6,450 to 6,500. Again, that turned lower. A bit of a rebound again today, but again, I'm not entirely convinced whether this is anything more than a bit of a knee-jerk back to the upside in terms of giving you another selling opportunity, because I think there's a lot still to play out to the downside. And on the commodity markets, well, we've seen the gold price having a bit of a strong rally on Friday, and that came on the back of short covering, and you can tell that because it went through so many key resistance levels on the upside. Lots of stops tripped out. Interesting that it couldn't break through the or couldn't make the continued momentum through the 1,098 key overhead resistance. It's now into a big band of resistance, and I'm not sure whether this is now the rally that's already played out. I would be surprised if you're going to see dollar strength coming through the market once again. I think the gold price could well start to fall away again, and that is my expectation in front of the Fed next week. With the payrolls report seemingly nailing on a Fed rate hike, I think the dollar is going to be strengthening in front of that Fed meeting. So the rest of this week, well, we're pretty much, you can sort of cut it up into three sections really. You've got the Chinese data at the front end of the week, where you've got the Chinese trade data on Tuesday morning. That will have a big impact on the risk play. Expectations of a big decline in exports, bigger decline in imports, so the trade data is not playing very potentially well to the risk trade. And then also you've got CPI on Wednesday for China as well. So again, seeing how that plays out into how the Chinese recovery, or Chinese slowdown, I should put, is playing out. Then we're looking at central banks. We've got through the middle of the week. We've got Wednesday and Thursday. We've got the RBNZ, the SNB, and the Bank of England all reporting within 24 hours of each other. And the likelihood is, or the possibility is, that the RBNZ, the Reserve Bank of New Zealand, is going to cut rates by 25 basis points. We could see also a rate cut from the SNB. Already running negative 0.75. Could it be negative 1% by the end of this week? And also the the Bank of England, whereby we've got a monetary policy decision and the Bank of England meeting minutes, where we're going to see the voting structure. No change expected there in terms of the 8-1 voting, but there's a possibility of a bit of a hawkish move, but still it's unlikely at this stage, considering how dovish the recent updates have been. And the end of the week, we've got the US data for retail sales and Michigan sentiment. Retail sales in the States has missed expectations every month apart from June this year. Are we going to see that continue? And if that happens, then you could see a bit of pressure on the dollar. So lots going on this week, actually. Even though we've got not a great deal of tier 1 data from the States, still lots to look out for. And I wish you good luck in your trading, and I will speak to you next time. Thank you.